So how is it possible that a little bit of trouble at just two regional banks in the US can suddenly cause a wave of panic all around the world? I mean, we're talking about markets from Tokyo to Frankfurt getting seriously rattled. Well, it's a story all about speed, how connected everything is, and, of course, fear. Let's unpack how this one tiny spark started a massive global fire. This one quote from investment director Russ Mould just nails it. Investors have been spooked. Because at the end of the day, financial markets aren't just about numbers and computers. They're driven by human emotion. And the emotion that took over here was pure fear. That one word, spooked, that's the key to understanding this whole chain reaction we're about to walk through. All right, so where did the first domino fall? Well, it all kicked off with some very specific and pretty worrying news coming out of the U.S. regional banking world. Let's go right back to the source. So on Thursday, two U.S. regional banks just dropped these bombshells. And there were different problems, but they landed at the exact same time. First, Western Alliance revealed it had to file a lawsuit because of alleged fraud. At the same time, Zions Bank announced it was forced to write off a $50 million loss on a couple of bad loans. Now, on their own, these are kind of contained issues, but happening together, they were like two big stones dropped into a very, very still pond. And the market's reaction? It was instant. And it was brutal. What's really wild here is just how fast it all happened. Western Alliance, their shares just plummeted, down almost 11%. And Zions Bank, even worse, a staggering 13% drop. This wasn't some slow burn. Nope. This was an immediate vote of no confidence from investors. But here's where the story really takes off. In our crazy, interconnected world, financial anxiety, it doesn't need a passport. The bad news from the U.S. did not stay in the U.S. As the planet kept turning and markets started opening up in other countries, that fear just hitched a ride. First stop, Asia. As traders were getting to their desks in Tokyo and Hong Kong, the only thing they were talking about was this news from the States. And this just perfectly shows you that ripple effect. Japan's main index, the Nikkei, it dropped 1.4%. Hong Kong's Hang Seng fell even harder, down 2.5%. The contagion was officially spreading. Now let's follow the fear to Europe. When their markets opened, guess what? Same story. We're talking about huge European banks. Giants like Germany's Deutsche Bank and France's Société Générale getting hit hard. They dropped 6% and 5%. And think about this. These banks had absolutely nothing to do with those specific bad loans in the US. But that's the thing about a crisis of confidence. The fear isn't really about those specific loans anymore. It's about what other problems might be hiding. It's a classic case of sell first, ask questions later. So we've seen stocks falling all over the globe. But how do people actually measure this feeling of nervousness? I mean, how do you put a number on anxiety? Well, there are specific tools analysts use to take the market's temperature. Let's look at a couple of the big ones. Okay, first up, you have this thing called the VIX. Its technical name is a volatility index, but literally everyone on Wall Street calls it the fear index. And that tells you everything you need to know, right? Put simply, when the VIX goes up, it means investors are bracing for a really bumpy ride. It's a direct measure of how much chaos they expect is coming. And as this wave of fear just washed over the markets, the fear index did exactly what you'd expect. It spiked. It shot up to its highest level since April. The key takeaway here is that this wasn't just some vague feeling people had. It was a measurable, quantifiable surge in anxiety across the entire market. And what do investors do when they get scared? They run for cover. And that brings us to our next big indicator, gold. As people pulled their money out of banking stocks, it had to go somewhere, right? A whole lot of it poured into gold, which is that traditional safe place to park your money. It pushed the price up to a crazy, unprecedented record high of $4,380 an ounce. This was what we call a flight to safety, and it's another crystal clear sign of just how jittery everyone was. Which brings us to the big billion-dollar question that was really driving all this panic. Are the problems at Western Alliance and Zions Bank just two random, isolated things, or are they the first sign of a much bigger hidden problem lurking under the surface of the whole financial system? See, the reason everyone freaked out so fast is that this news didn't happen in a vacuum. Investors were already on edge. There were these growing worries about failures in the private credit market. You had these high-profile cases like Tricolor and First Brands. On top of that, you had top bankers warning over and over that this huge surge into AI stocks might be creating a massive, overvalued bubble. And then the head of America's largest bank, Jamie Dimon from JP Morgan Chase, came out and said this. It's blunt, it's vivid, and honestly, it's terrifying. When you see one cockroach, there are probably more. When a guy in his position uses language like that, it sends a powerful signal. It screams that there's a deep-seated worry that these small problems we can see might just be a symptom of a much larger unseen infestation. So out of all this chaos, you basically had two competing stories start to emerge. On one side, you've got the official, don't worry, everything's fine. And on the other, you have this deep, nagging doubt from investors. Let's break down these two opposing takes. Just look at this contrast. The White House came out trying to calm everyone down, saying the U.S. banking sector has ample reserves, that it's in a great position to handle stress. But investors, their concern was whether these incidents were pointing to something deeper, something systemic, things like sloppy risk management or loose lending standards that could be hiding all over the place. And it's that gap, the gap between official confidence and market skepticism, that really captures the mood right now. And so that leaves us with the ultimate question, doesn't it? Was this global sell-off just a temporary tremor, a brief moment of panic over some isolated news? Or is it a foreshock, a warning sign of a much bigger financial earthquake that's building just beneath the surface? For now, the entire market is just holding its breath, waiting to find out. Welcome to The Explainer. You know how one day everything in the market seems fine, and the next, bam, billions of dollars have just vanished. It can feel totally random. Well, today we're going to unpack exactly what just sent a wave of panic through the global markets. Let's get right into it. What is behind this sudden freakout? It really seemed to come out of nowhere, but as you're about to see, the warning signs were definitely there. You just had to know where to look. Okay, so this whole thing really kicked off last Friday. And when I say kicked off, I mean it was a bloodbath, just a sea of red across global stock markets. This was not a slow drip, it was a sudden, sharp drop that really caught a lot of people off guard. I mean, just to give you an idea of the scale here, let's look at the UK. In a single day, nearly £11 billion was just erased from the value of the 5 largest banks. Barclays alone saw its shares drop by almost 6%. Ouch. And if you zoom out to the rest of Europe, the number is staggering. It jumps to over 37 billion euros in lost value across the banking industry. That is a massive hit, and it affected everyone from Deutsche Bank in Germany to Banco Sabadell in Spain. And this wasn't just a European problem, not by a long shot. The jitters that started on Wall Street spread like wildfire. We saw major markets get hit hard, from Asia to Europe. Japan's Nikkei, Germany's DAX, the UK's FTSE 100, they all took a serious tumble. So you know the drill, right? When investors get scared, what do? They run for cover. And as stocks were tanking, money started pouring into what are called safe haven assets. This sent the price of gold soaring to a record high. We're talking its biggest weekly gains since the 2008 financial crisis. So you're probably thinking, what could possibly cause this kind of worldwide meltdown? A massive corporate scandal? Some new geopolitical crisis? Nope. The answer is almost ridiculously small. And it comes from 2 regional banks in the U.S. Get this, the whole panic was sparked by 2 announcements. First, a bank called Zions in Utah wrote off a $50 million loan. Then, Western Alliance in Phoenix started legal action over a $100 million bad loan. I mean, in the grand scheme of global finance, that's practically pocket change. Which brings us to the key question here, right? How on earth could these 2 isolated incidents at these relatively small banks spark a full-blown global panic? It seems like a massive overreaction, or is it? To understand why everyone reacted this way, you have to realize it's not about the size of those specific loans. It's about what they represent. It's the fear that these are just the first dominoes to start to fall. The real boogeyman here is this thing called credit stress. See, central banks have been keeping interest rates high to fight inflation. That makes borrowing money way more expensive for everybody. And now there's this growing fear that businesses and people just won't be able to pay back their loans, which could set off a whole cascade of defaults. You know, one analyst, Jim Reed over at Deutsche Bank, really connected the dots here. He pointed out that this isn't just about 2 bad loans. It's raising much bigger questions about the health of the entire lending system, especially after all these years of high interest rates. And you gotta remember, this isn't happening in a vacuum. These fears have been bubbling under the surface for a while now. The market just saw the bankruptcy of Tricolor, a subprime auto lender, and First Brands, an auto parts supplier. So investors were already on high alert, kind of looking for signs of a domino effect. But to really understand why investors are so incredibly nervous, we need to look back at a crisis that is still very, very fresh in everyone's memory. Just look at this timeline. It shows you exactly how fast things can completely fall apart. In 2023, Silicon Valley Bank went from seemingly stable to total collapse in about 48 hours. It started with a simple announcement about raising money, and it ended in the second largest bank failure in U.S. history. And let's be clear, SVB wasn't some tiny regional bank. It was a massive $212 billion lender, really popular in the tech world. Its failure sent shockwaves through the entire system, and that memory is precisely why the market is reacting so strongly to any new sign of trouble. So, okay, given all this context, the fear, the recent history, where do the markets go from here? Is this just a blip, or is it the start of something much bigger? Let's see what the biggest names in finance are saying about all this. I mean, their words carry enormous weight and can really shape how the market feels and acts. You won't believe this, but in a comment that now sounds unbelievably prophetic, JP Morgan's CEO Jamie Dimon warned, just this week, before the sell-off, that more cockroaches could emerge. His point? You never see just one. If there's trouble in one spot, there's probably more hiding in the shadows. And this whole banking scare isn't happening in isolation. It's really just one more brick in what experts are calling the wall of worry for investors. They're already juggling concerns over AI stock bubbles, political instability in the US, and geopolitical tensions. These bad loans just add a whole new layer of uncertainty to the pile. So, the ultimate takeaway here is this lingering, really uncomfortable question. Was this week's sell-off just a temporary panic attack? Or are these bad loans the very first tremors before a much bigger financial earthquake? For now, the market is just holding its breath, waiting to see what happens next.